Okay, I'm going to start right now. So if you want to, is that all right? Thumbs up if it's okay to start now. Okay, good. All right, so we're talking today about long-term care insurance. We're talking about long-term care insurance, protecting your future with long-term care planning. Now, I know last week you had a great program where you discussed dementia, which happens to be one of the biggest causes of long-term care insurance care. So I'm going to build on that. Hopefully, you remember what you listened to last week, and we'll take it from here and talk a little bit how to protect yourself from that type of scenario. We're going to build on what you learned last time with dementia being one of the key components to long-term care insurance planning as well as the claim itself. So I want to make sure you have that good foundation. And just so you know, dementia, Alzheimer's is responsible for about 40% of all of our long-term care claims. So that's an important aspect. I have been doing this now for 28 years. I'm a licensed agent and I focus totally on long-term care insurance. We can look at other insurances that help us to combat different problems. But again, our focus today and my focus has been primarily for long-term care. I work for the Krause Agency. We are representatives of all of the top carriers in the industry. And I will be working side by side with Tiffany for anybody that's interested in becoming an agent or learning more about the product itself and how to purchase it. So why are we talking today? Well, what's prompting your interest in long-term care insurance protection? Well, I hope it was some of the things you've talked about before. I hope it's because you've heard about long-term care insurance and maybe you're not clear on what it's about or how you go about buying it or what it covers. And so hopefully that's why you came today. And we're going to clear some of that up as much as possible. What you hope to achieve today, I hope, will be a basic understanding of how to purchase long-term care, what goes into purchasing, and for those agents that want to sell it, they may want to add it to their portfolio. I'm sure this will help you make that decision as to whether it's something that you want to add to help your prospects in the future. And we're going to be here together, Tiffany and I, to help you going forward. So my job here today as an advocate for long-term care is to help you to understand the long-term care insurance industry. It is complex. It is not one of the easier products to sell, but there are lots of different solutions and much to offer you. We are going to help you when it comes time to research the different companies and the policies that they offer so that we can put you into the right place either to sell it or to buy it. As I mentioned, we represent multiple carriers that will offer you the best coverage, which will fit your individual needs. This is not a product where we say this is one place to buy it, one company to buy from, and you either qualify or you don't qualify. That's not how it works. We will find a solution for you. We have many. The process, everything that you do today has a process. First thing you would do as an agent or as a client is to determine whether you need long-term care protection. There are certain people that don't need it, and generally those are people that are very wealthy. That's not that they don't need the care potentially, but they wouldn't need the insurance. So we're going to determine that by talking to the person one-on-one. We're going to find out if you can qualify it for it. This is a health insurance product, so we're going to look at your health and as well as your finances. As I'll make a little analogy. It's sort of like buying a car. When you go into an auto mall and you decide that you want to buy something, they're going to look at your financial health and they're also going to look at your ability to pay and how you want to pay. So it's some similar process. We're going to educate you on long-term care itself, and we'll also talk about the insurance product and the different types of care that are available. At this point in time, we'll design a plan. Like I said, we will make the plan fit your needs, not you to fit the plan's needs. And then, of course, once you decide that you want to move forward, we start with the application process. So the first thing that we talk about, of course, is your personal health history. We're going to ask you to give us some information in the form of what we call an intake form. We'll ask you to fill that out with or without us. We'll be looking at your general health, whether you have any chronic conditions, whether you take any prescription medications, what type of medication, for how long you've been taking it, what dosages they are. And then we will put a little plan together that we'll share with the underwriters at the carriers, or if we can understand what you're doing, we'll do it on our own. We do have most of our agents will learn the different conditions and the medications, and they'll be able to determine at the point of sale as to what products that you can move forward with. And if we need help, we'll go to the carriers. We're going to also look at what you do on a day-to-day basis. Do you work out? Do you do yoga? Do you take a walk every day? Any kind of other exercise? Or are you basically a sedentary person who sits by a desk all day long? We're going to look at that as well. And then, of course, when we put that whole package together, we'll get an underwriting rating from the carrier, and that will allow us to offer you the best product that fits your needs, as we said. We're going to look also a little bit, and I'm not going to tell you that it's a determining factor, but it is starting to become a determining factor, that we're going to look at your family's medical history. Although the medical history isn't totally determined by your family's history, it's good to know anyway. We're going to look at mom and dad and grandma and grandpa and maybe your siblings to see if they have any issues that might carry over. There are a couple of carriers that will look at your family history and maybe cap how much you can start with in the way of coverage. And they'll say that, because you have a propensity in your family for this type of issue, we're going to limit our exposure and going to write you a little smaller policy. But we do take that into consideration. We ask you to share that with us too at the time of claim. Again, from the agent's point of view, you're asking the client these things. From the client's point of view, you're sharing with us what you had. We also want to know if you have any experience with long-term care. And that way, by that means, have you had a mother or father or grandma, grandpa that you sat around and watched or maybe assisted with a claim to help them through their later years? Maybe a friend, a family friend that you've heard about where the person had a good or bad experience with it. So we want to know everything you know about it so we can fill in the missing pieces of that puzzle. What's the question? The question is long-term care. Now, when I ask that question to a group, most of them will say, "Oh, it's nursing home insurance." Okay, well, that's a part of it, yes, but it's not the whole story. To assign a definition to it, I would say long-term care is an event. It's broadly defined as care provided for the benefit of those who are unable to care for themselves. Typically, this type of care will last longer than 90 days. Again, i.e., the term long-term care. It will require supervision due to, I'm sorry?
No, if you guys could please mute. No, sorry, Richard, that's someone that's just come in. So if you guys could please mute, Richard's given an awesome presentation. Thank you all for joining. Go ahead, Richard.
Oh, okay. No worries. We welcome whoever comes in. That's okay. This is a sort of an informal gathering, so you can feel free to interrupt anytime. The supervision due to the severe cognitive impairment such as Alzheimer's. So there's two ways that we look at it. One of them is the one you talked about last week, which is the Alzheimer's dementia, and the other is a need for assistance with the activities of daily living. Those activities are the things that we're familiar with. We do every morning. What do we do? Well, we get up, we sit at the edge of our bed, we decide whether we want to move forward or not. And if we decide we're going to move forward, we're going to stand up and we're going to move probably towards the toilet. We're going to do our daily volitions there. And at that point, we'll probably get dressed. And then maybe we'll we'll probably bathe first and then we'll get dressed. And then we'll move into the kitchen. Well, all of these things are the activities of daily living. Also, if you have an issue with the inability to toilet yourself properly, in other words, you can't control, that's considered an activity as well. Now, these are called triggers, and what they do is they trigger a claim. And how does that work? Well, if you can't do any two of these, if you can't transfer yourself to the bathtub or to the shower, that's two. If you can transfer yourself to the bathtub, but then you can't get yourself to dress yourself or to feed yourself, that's another two. So any combination of those two out of the six would require that you call the company up and say, we're having some issues with the activities of daily living with my relative, and we would need somebody to come to the home and take a look to see if you can authorize a claim at this point. The other trigger is a cognitive impairment. Now, you've talked about Alzheimer's and dementia. Generally, those are organic illnesses. Those are things that happen inside of you. But sometimes we are faced with psychological issues. Maybe we had a death in the family. Maybe we can't get over the loss of a spouse or something to that effect, and you have to seek psychological care. That would be considered a non-organic illness. But in both cases, if it's expected that you cannot continue living on a normal basis, or possibly you'd be a danger to yourself. In some cases, if people can't function in a normal basis, they don't remember to take their medications. They take walks out of the house. They don't remember where they went or where they're going. So all these things are considered cognitive impairments, and we obviously don't want that to happen. So the triggers are either or, not both. So if you can't do 2 of 6 of these, or this is occurring in your life, then it's time to call the insurance company and have them come and evaluate the person. Let's look at some numbers. I'm not a big fan of statistics, but we do have to consider a lot of these companies have been selling long-term care for 40 plus years. They've compiled a lot of information, and it's good to know about them as you're selling the product, or if you're wanting to learn about the product. So over 50% of individuals turning 65 today are expected to require long-term care. Now, that doesn't mean they're all going to have Alzheimer's or dementia, or they're going to be laid up forever. It could be a shorter claim. It could be something that happens post a stroke or something to that case. But it is expected that as you turn 65, you have more propensity to have these things happen to you. Let's look at the year 2050. First, let's look back at the year 2000. A lot of things have happened since the year 2000. Look back and think to yourself, what could have, maybe you think about 9/11, or maybe your children were born sometime between then and now, and you say to yourself, boy, time sure went fast. Well, let's take that and look forward 25 years. The number of Americans who require long-term care will more than double in the next 25 years. And why is that? Well, that's because they're keeping us alive a lot longer. I always make the equation to an old car. If you have the ability to keep that old car running, you do so. It may not run as good as it used to, but it's still there. But it's giving you problems along the way. Well, that's what happens when the doctors cure us of certain things. We may not be perfect again, but we tend to live longer. Now, as we live longer, more and more of us are living longer. So there's going to be more competition to receive this type of care. So we better be prepared in the next 50 years to compete with the number that's going to double. People ask me all the time, how much long-term care should I buy? How long is my claim going to last? Well, again, statistics will help us, but they're not going to be definitive. But the average claim right now is for about 2.8 years. So that gives you a place to start. We always looked at it as a benchmark. And about 20% of the people that go on claim will actually have a claim that will last more than 5 years. So again, which category you're going to be in, I can't tell you, but it's a good place to start and factor into making the decision on how you're going to purchase the policy. 66% of adults 50 or older feel anxious. Well, again, I guess they've done studies and people are thinking about it, especially when you turn 50. So if you can think about it sooner, or if you're past 50, you better start thinking about it a little bit more, because again, you're going to be competing for care until the industry catches up for the amount of people that need the care. 50%. Well, less than 50% of individuals over 65 have set aside money to pay for long-term care. Well, unfortunately, our society is different from other societies. Some societies spend a lot of time teaching their children to save money, put it away. You never know when that rainy day is going to come. But Americans are different. We like to spend our money when we have it. But again, this is something to think about going forward. And then 54% by 2029, that's only 4 years from now, 54% of the seniors will not have enough financial resources to pay for long-term care. So what are they going to do? Well, we if we're going to pay for something, we got to know how much it's going to cost. These are just average costs, and this is about this comes from one of our top companies that have been in the business for a long, long time, and they're putting out these figures for us to just contemplate. So think about your mortgage right now. How much do you pay for your mortgage? Is it more than $62.92 a month? Well, that's what it's going to cost to stay home if you need care. And that's what it'll cost to have somebody come in and take care of you. And that's not for a full day. That's for about 8 hours a day. If you choose to go to assisted living or you're able to go to assisted living, it's going to cost you about $53.50 a month. Again, thinking about your mortgage. And a semi-private room in a nursing home, that's going to be almost $9,000 a month. Again, if you live in a mansion and you're spending $9,000 a month, maybe that won't bother you too much, but the average mortgage is probably a lot less than that. So, we need to start putting away money or figuring out a way to cover that type of cost. Looking into the future again, looking at 25 years from now, these are today's costs per year. And a nursing home stay could cost you over $100,000 per year. Assisted living about 65, and about 75 for about 44 hours a week of care at home. In 25 years, that number is going to more than double. And that's what looking back has told us. So we're looking at past performance, predicting future outcomes. Now, when you buy a long-term care policy, we try to have you factor in an inflation protector, which helps to grow. And here's a little clue for some of you. If you're trying to determine how much you have to get an interest to double your money in X amount of time, the best way to do it is called the rule of 72. If you take the number 72 and divide, let's say, 3% into 72, the number is 24. What does that tell you? It tells you that if you invest at 3%, it'll take 24 years to double, which kind of fits into our program here. So one of the most popular inflation protection benefits that we offer is a 3% compounding inflation rider, which will get you at least close to what the cost of care might be in the future, assuming it doesn't skyrocket like some people say it will. But we got to do is the best we can with what information we have. So what motivates people to buy long-term care? Well, let's think back again. Do you remember the day, for those of you who have children, when your baby was there and they gave it back to you and he's all cleaned up or she's all cleaned up and you're both looking down and you're having that great conversation, you're saying to yourself, wow, this is terrific. We finally have our caregiver. We know that when we become 80 years old, this little bundle of joy will be there to take care of us. And that's what we planned, and that's why we had a child. And I hope some of you are laughing by now because that's obviously not what we're planning. And most people do not want to burden their children, but we can't help children from being involved in our lives, and we can't help them from wanting to care. But I'm sure that's not the primary issue. But a lot of people use that as a reason to purchase long-term care. They do not want to burden their children. A lot of people wait until they have this back pain or the neck pain or shoulder pain, something, and they say, oh, I might have a problem going forward. I better get that insurance I heard somebody talk about. Might be a little too late, might cost you a little bit more extra money to purchase it, but I would suggest that we try to get to it before, and that is while you're healthy and while it'll be easier to qualify. Long-term care is less expensive now than it will be in the next birthday. Well, that's true. Every year that you wait, long-term care will be more costly. And I don't want to scare you away from waiting till next year, because if next year is the year that you can purchase it for whatever reason, then that's fine. It does go up a little bit extra based on your age. So we want to keep that in mind. The sooner you could buy it, the better off you'll be, financially wise. And then I want to choose where I want to receive my care. Very important to have a choice. If you're able to, if you have that money and you can say, I'm going to go to that assisted living or even a better nursing home or have the care at home, if it's able to be delivered at home, having that money and the control of who's going to be your caregiver, where the care is going to be given is very important. And it goes a long way to peace of mind. So while you're worrying about paying that premium, what does it get me? Especially what happens if you you never use the benefit, that's always something to consider. We have answers for that. But again, peace of mind goes a long way. What motivates long-term care protection? Well, um, I can't expect Medicare to cover all costs. Well, I'm glad that that's a statement here, but a lot of people thought Medicare was going to cover the cost. They thought that's what Medicare was for, and Medicare will help you in a small amount of time. You have to qualify for a certain amount of care. That would be something your agent will talk to you, and if you're an agent right now listening, hopefully you'll get familiar with that and we'll help you if you're not. But Medicare doesn't cover a lot of long-term care. It's that day-to-day activity. Medicare will help you a little bit if you're in a nursing home or a rehab center, a little bit at home. Some states are working on that, but it's not the answer to your question for that day-to-day activities of daily living type care. I don't want to go on Medicaid. Okay, fine. Medicaid wasn't there for everybody. Medicaid was put there for people that were indigent, people that couldn't afford to do certain things with regard to health. And of course, Medicaid does pay for about 45% of all long-term care now. But there's a trade-off with Medicaid. With Medicaid said, we will let you come into one of our facilities. We're not coming to your house, but you can come to one of our facilities, but you got to liquidate most, if not all, of your assets. They're very generous. They let you keep $2,000 a month in income, and that's it. So it's not your best choice, but it's there for those that unfortunately haven't been able to buy insurance or didn't save. I think everybody wants to protect whatever life savings they have. I think that's an important component. And you build up your life savings. You have a purpose for it. It's a shame to have to lose it all to a claim under the long-term care insurance. I want to leave a legacy. Yes, a lot of people collect their assets. They go to great extents to grow them. They have lots of plans for their children and their grandchildren. They would like to leave that legacy for them. And unfortunately, they get struck with a long-term care insurance claim, and there goes that money. It would be nice if they had something to protect their assets, i.e., long-term care insurance, so that they could continue that legacy that they had planned all along. The chances of needing long-term care have tripled since 1983. And what else has tripled? Well, probably I can't really tell you it's tripled or not, but I can tell you that medical assistants, what they've learned, what doctors have learned, what hospitals have kept us around a lot longer. And that's another reason why we have to be prepared to make sure that we have some coverage, because we're going to be fighting for those spaces until medicine catches up with us. If you needed care tomorrow, now this is a scary question, and this is something we always ask our prospects, and agents should be prepared for answers. Where would you want to receive your care? Well, everybody's going to say, I want to stay home. Well, that's fine. If you're able to, and you can afford it, and if you want to subsidize your ability to afford it with an insurance policy, I commend you. Who would care for you? Is it possible that your spouse can care for you? But I know people there's a big disparity in size. My mother, for example, was 5 foot tall. She weighed about 110 pounds. My father was only 5'5", maybe 140 pounds, but she couldn't lift him up. As much as he would want to stay home, she had a lot of work ahead of her during the time that he had his claim at home. And my father had an Alzheimer's claim for 12 years, and she took care of him for 7 of those years until she could no longer do it. So a lot of thought has to go into who's going to take care of you. When you have the insurance, you have that choice. Where would the money come from to pay for your care? Very important. You have to plan out, where's that money going to, which investment are you going to take the money from? Is it your stocks, your annuities, life insurance, cash value? Do you have a lot of cash in the bank? Are you going to borrow? There's lots of things to think about. But if something were to happen to you tomorrow, these are questions that you need to think about. And how long could you afford to do this? Maybe you could afford it for a year. So we have to create the policy that says you have a certain amount of responsibility, and the rest of it should go on to the insurance company. And that's what the idea behind long-term care insurance is about. How do you feel about using your money? Of course, When we have children, they ask us to borrow money. Maybe there's an investment we would like to do. Maybe there is other things. We want to buy a property. So how do you feel about using that money for your care? Would it be better if the insurance company sent you a check every month to help you and you paid a little bit for that privilege? Again, something to think about. Here's an important question, and this is very discerning, this question. If you're sitting with a couple and at this point in time, you're sitting and you're the agent, you're going to ask, although no one wants to believe they will need long-term care, when you think about it honestly, do you believe there's a chance something could happen to you? Now, most people will say, yeah, I've listened to you so far. I've had personal experiences. I've seen it happen in my family or my friends. There is a possibility. Now, sometimes you'll sit with a couple, and I'm speaking to the agents right now, and maybe the people, the prospects out there that might be listening to this, and there's a husband and a wife, and you know how men are. Men are indestructible. They don't believe in anything. They don't want to pay for anything. They think they're going to lead forever, and they'll say, look, no, this isn't going to happen to me. I don't believe in this insurance stuff. I'm not going to buy it. And that's when you'll look at the wife, and you know that look. All you women out there know that look. You look up or over or down, depending on how tall your husband is, and you give him that look. Like, what are you talking about? Or you'll see the elbow go out quickly to the right and goes into the ribs, the side of your spouse, or maybe the slap in the back of the head. Well, honey, if you don't care about yourself, what's going to happen to me if you pass away and I'm left to my own? And that is something that happens most of the time. We know that men tend to pass away before the women, and then they're left to themselves to take care. Hopefully, there's some family, but sometimes there isn't any. But it would be nice at least to have a long-term care insurance policy. So that's an important question. And if both people say it's not going to happen to me, well, it's time to shut the computer and move on because they're not going to be buyers. And if that's your method and you think that way as a client, then you're probably better off not looking into long-term care insurance. So where is long-term care provided? Well, again, remember the question, what is long-term care? A nursing home coverage, that's what it's for. Well, look, 73% of people that go on claim, it happens at home. Well, that's great. I want to be in this team. This is the 73% team. And 13% of the people go into an assisted living. Now, you've heard of assisted livings. They're better than nursing homes. They're a little bit more private. There's less people to be attended to. And some people go in here by choice, even before they go on claim, because they can't maintain their home anymore. They've gotten to the point where they're just but they just don't have the ability to maintain their home. So they move into the assisted living. And when they do go on claim, they have that insurance that then takes over the cost of the assisted living. And that's about 13% of the population. And then unfortunately, they have that unfortunate 14% where they can't stay at home because of the severity of the claim. They're not in the assisted living, or they have to move out of the assisted living because their claim is getting worse, and they move into that nursing home. So just to give you a perspective and to maybe assuage you of the thought that every long-term care claim has to be in a nursing home, think in terms of this is what you're selling primarily. You're primarily looking at home care with the ability to also use the claim in assisted living or nursing home. Now, how do you pay for the care? Well, certainly you can go to your family. The kids might have some extra money. Your brother, your sister, they might have some extra money too. There's always that rich uncle. He can be approached. I don't know if that's a comfortable way to think, but that's a possibility. Don't want to take that off the table. You can go to the government. You know how good the government is. They're there to help us every step of the way. Now, if you're indigent and you can't afford things and you're living on your last nickel, Medicaid is there. They will help you. Um, they also the government also offers you some services through the VA if you're a soldier. Again, I thank you for all those that have served. And you have a claim and you have received a service injury. There's a formula that they use. It's called aid and assistance, and they will factor in your income and your injury and see if there's a way that they can help you as well. And then, of course, there's Medicare. And I told you already, Medicare has limited coverage, nursing home, rehab, a couple hours a week at home, but maybe not the answer for the general population. So the general population is on their own, so they have a choice. We can self-insure, or we can hope for the best and hope we never have a claim. If you're rich, you can do this. You can insure yourself. You can take a piece of the money, put it away, uh, invest it in something that's going to grow, and then you're covered. So you're self-insured. But a lot of us, and I would say the majority of people, can't do that. They need some help. And the help comes from long-term care insurance. Transfer some or all of the risk to the insurance company. Manage what you can do on your own, but let the insurance company cover as much as it can based on how much you can afford to pay. So you're paying a little bit to get a lot. How many people out there use a coupon when they walk into the supermarket? You don't take a buy one, get one, and throw it out the window and pay full price for both. Well, that's pretty much what the insurance product is. A lot of people today have purchased a policy that's equal to half of what the cost of the care will be needed, and they assume the responsibility for the other half. Kind of a BOGO. So again, think about that when you're planning your care. I don't want to go over this too much, but like I said, Medicare does provide limited coverage, so it's there. We could talk about that. But it's basically skilled care, and it basically takes place in a rehab center or nursing home after you've been in the hospital and have been admitted for 3 consecutive days and they're ready to release you. Then they'll send you off to the rehab center or the nursing home. Medicare will cover 90 days pretty much for coverage, 20 days for free, and the other 70 you have to have some kind of copay that could be satisfied by Medicare Advantage plan or Medicare Supplement. But again, we would talk about that at point of discussion. The VA went over the aid in attendance. They're going to look at your income. They're going to see what kind of injuries you might have had while you were serving. And they're there to help you if you fit the bill. And they'll even help your surviving spouse. And Medicaid, again, for those people 65 or older, unless you're blind or disabled and have limited income and resources, and prepared, if you have resources, to spend everything else on the Medicaid system. Now, the insurance companies are not all evil. Some of them, most of them, have gotten together with regard to trying to help you or motivate you to buy long-term care, and they put together a plan called the partnership plan. They allow you to shelter a certain amount of your income or your assets, I should say. And here's how that works simply. Supposing you have a family estate. In other words, you're worth $500,000. Supposing you go on claim and you use up all your money. You said, I didn't want to buy long-term care insurance. It wasn't affordable. It cost too much money. Now you went on claim. You used up all your money. You now have to go on Medicaid because you still need care, and Medicaid's your only answer, and now your family has no legacy. Well, the insurance companies looked at that and they got together with the states and they said, what can we do to help people? What can we do to motivate them? And they came up with that partnership plan. So let's look at someone who purchased a $300,000 long-term care plan. And let's say they go on claim, and that same person has that family estate worth $500,000. So they go on claim, and the insurance company foots the bill for the first $300,000. Now the person still wants to be at home or in a good nursing home, and they're going to spend about $20,000, $200,000 more. Now, what happens to the $300,000? Well, because they bought an insurance plan worth $300,000, the state Medicaid system says, we're going to allow you to keep your last $300,000 of assets. And you do whatever you want with that. You don't need to pay us back any more money. So now you go into the Medicaid system knowing you have that $300,000 to save. Now you have a choice. You can spend it all and try to stay at home or where you are right now, or you can keep it for a legacy because the state will not come after you to recoup the money that they spent. Because when you go into the Medicaid system, if you have extra money, it's their right after you pass away to get that money paid to them. But because you had the partnership plan, which is simply adding a inflation factor to your long-term care plan, because you had that, you get to protect your assets. So there's a motivation factor to wanting to buy long-term care insurance. So at that point, once you get into the Medicaid system and you get to keep that, what happens to your family legacy? You get to keep it because it now becomes exempted. So we can talk about that too when it comes time to purchase a plan. And those agents that have already gotten their certification should know about this because it is a requirement that they all do have that certification before they sell long-term care. Another important question, if you were to get sick tomorrow, other than liquidating your assets, relying on your children, or seeking government assistance, do you have any other plan to pay for your care? Yes, it's a good point at this time for you to think about that. If you're a client, we want to put you on the spot. We want to get you thinking. If you're not going to purchase long-term care insurance today, then at least give this a lot of thought and put together a plan as to what would you do if something were to happen to you tomorrow. If you're an agent, always ask this question. It's a very telling question, and it also gives people a chance to really look at their lives and make sure that they have a plan. If they're not going to buy the long-term care insurance, then at least they should put a plan together. So let's look at what we protect. We all have a nest egg. Inside the nest egg is your home, your pension, your non-qualified funds, could be annuity, could be the cash value, could be cash in the bank. Maybe you own a property or two. Maybe you have some investments that you want to protect. Maybe you collect things and you just want to make sure you protect those things. Well, most of us want to stay in the home. That's very important. So we're not going to consider the home. We're going to put a fence around the home and we're going to isolate that out of the nest egg. But the rest of these things, we're going to want to protect that. So how do we protect things? Well, the first thing we protect is our home. And the fact is that people who own homeowners insurance, only 1 out of 1,200 people will actually make a claim. How many people do you know that have lost their home entirely to a hurricane, to tornado, um, any kind of situation where fire maybe burns the home down? While you've heard stories, the chances are not that many people. But we spend money because we have to in some cases. Although there are a lot of people that are choosing not to buy homeowners insurance, especially where I live, because of the cost. But only 1 in 1,200 will actually claim on it. Now, if you have a car, you know that car insurance is really expensive now, even more so than homeowners insurance, and that's because more people claim on cars than they do on homes. So 1 in 240 people will actually make a claim for a car. We have health insurance. Well, that's really expensive. That's even more expensive than auto insurance and homeowners insurance. About 1 in 15 people who own health insurance will actually make a claim on it. So there's food for thought. We have life insurance. Lots of people have term insurance. Term insurance is cheap. Why is term insurance cheap? Because they hardly ever pay out. Only 2% of the people that have term insurance get a payout because they outlive their term. Some people have whole life insurance or universal life insurance. Yes, that pays out 100% of the time. Insurance companies know that and they charge more for it. And then, of course, there's people that are lucky enough to have worked for a good corporation. They might have a pension, a 401k, something that is going to be guaranteed. So their lifetime income is covered. So when we see homeowners insurance and auto insurance and health insurance and life insurance and income insurance, what's missing? That's right, long-term care insurance. And believe it or not, those that have purchased long-term care insurance, only about 11% of the population that should own it. 1 out of 2 of those people will claim on their long-term care insurance, far more than any of the other insurances. So why are we not protecting for long-term care insurance? It gives pause for thought, as they say. Another important question, can you think of anything other than the risk of long-term care that could involuntarily wipe out your life savings, and take away your independence? Is there anything else that can do that? Now, some people say to me, well, the stock market. Yeah, the stock market could really tank and I'll lose all my money. But I didn't ask that question. The question I asked is involuntary. When you go into the stock market, you go in voluntarily. You take a risk. Hopefully it's a smart risk. But when something happens to you that's not voluntary, it's involuntary, and it wipes you out, what is your plan? How do you maintain your independence? What should you have in your portfolio? 3 ways to pay for long-term care. Well, the best way is to be very rich. Have a lot of money. Self-insure. No worries. No insurance needed. You can be very poor. I don't think you should aspire to be poor. I don't think you should aspire to rely on the government. That doesn't do anybody good, but it's there in case you are. My suggestion is to be insured. It takes a lifetime to build your nest egg that we spoke about just now. Why risk losing it for one long-term care claim? And it happens all the time. Now, actually purchasing the policy, you do have choices. We offer traditional long-term care insurance, which is like every other insurance. You buy it, you hope you don't have to use it, but it's there in case you do, and it does give you a relative amount of peace of mind. You generally don't get anything back. When you pay your car insurance, you're not getting anything back. You don't hope to have a claim so you can get some value out of it. You don't hope your house burns down so you get some payback on that insurance plan that you hate to pay. But you have it there. It's peace of mind. You can pay for the traditional long-term care insurance many different ways. You can pay it all annually, one time, one and done, as they say, or you can spread out the payments. But it's just like a loan. If you pay your loan off sooner, you get a better deal. Pay your house off in 15 years, it costs you less of a percent than it does if you pay it off in 30. Take a loan out, same thing. The less time you pay, the better the deal. We also have what they refer to now as hybrid or asset-based long-term care. Now, that does give you something back if you don't use your long-term care. You could have a foundation of a life insurance plan that offers a long-term care rider or an annuity with a long-term care rider. We have plans that are guaranteed issue that have long-term care riders. So there's lots of different choices. Now, there's going to be different options to pay for these too. You can pay it out over your lifetime. The good news is if you're paying it out over your lifetime and you go on claim, which is the bad news, the company picks up the rest of the premium. That's a good thing, even though you have to go on claim to get the good thing. So I don't know if it's a good thing or a bad thing. You can pay it out a lump sum, as we said, one and done. Or maybe you're 50 years old and you're smart and you say, hey, time to buy long-term care, but you know what? I don't want to pay this until I'm 100. I want to pay it till I'm 65 or maybe 70. So you can buy a limited pay plan where you can pay it out over that period of time. We can create that for you as well. So there are different ways of paying for the plan, and we try to do that to make it easy on you so we can fit your budget. And what I call premium tolerance is what is your tolerance for how you're paying the premium. So very important to consider that, and we will talk to you about that. Now, this is the meat and potatoes, as they say. There are certain factors that when you purchase a plan that are common to all long-term care. You will decide how much per month that you want to buy. You will decide for how long you want the payments to come for you if you go on claim. Remember, we said 2.8 is the average. This is 36 months, a little bit more. We're going to take out our calculator and we're going to multiply 5,000 times 36 months. And that number is going to come to 180,000. This is what you're purchasing when you purchase a policy. Some agents will call it a pool of money. I like to look at it as a checkbook because everybody's had a checkbook at one point in time or another. If you have $180,000 in your checkbook and you write a check every month, 36 months, for $5,000, in 36 months, your checkbook will have a big zero in it. At that point, you'll assume responsibility for covering your care. But again, it's just mathematics. It's a long-term care checkbook. Now, you may say, well, what if I don't spend all of the money every month? Okay, good question. If you spend half the money each month that you're allowed to spend, because you can't spend any more than this, even though you have 180, that's the one difference about the checkbook and long-term care. You can't spend more than $5,000 a month. That's the only criteria. But if you spend half of that, then naturally it's going to last twice as much. Again, mathematics. 2,500 times 72 is that same 180. So if you spent 2,500 for 72 months, 6 years, at the end of that period of time, again, you'll have that big zero. This is the nuts and bolts of all long-term care insurance. How you pay for it is up to you. It also depends on which type of policy you choose, but it is similar to a checkbook. So you don't necessarily think that you're buying a 3-year policy and then when 3 years is over, and I don't mean 3 years from the day you purchased the policy. I'm talking about 3 years from the day you go on claim. Obviously, you're going to go on claim later in life, knock on wood. So whenever that starts, then the clock starts ticking off the months. Now, if you get better in the middle, you don't lose the rest of it. So let's say you had a claim for 18 months and then miraculously you get better. You get to keep that 18 months because you didn't spend your checkbook down yet. So I hope everybody understands that. Now, in closing, I'm going to say this. I'm going to give Rosalind Carter, a late Jimmy Carter's wife. She was very, very active in the Alzheimer's community. Unfortunately, she just recently passed from Alzheimer's. Talk about things that go around. But she said this: there are only 4 kinds of people in the world. Those who have been caregivers, and if you've been a caregiver, you know what that takes to be one. Those you are currently those you are currently caregivers. In other words, those are currently giving care. Those who will be caregivers in the future. So you have past, you have present, you have future, and unfortunately, those who will need this type of care in the future, of course. So again, words to think about. I think it's important that everybody thinks about what their role is as a potential caregiver or if they need the care in the future. I just want to say at this point, I think it's important to thank Tiffany for bringing us all together today. Whether you're listening to it now or you're listening to it in the future, Tiffany is there to help all people that are looking to become agents. You'll get to work with not only Tiffany, but myself, and we'll make sure that will help you be successful if you would like to add this type of insurance to your portfolio. If you're a potential client and you're thinking about buying long-term care, the same thing holds true. Go to Tiffany. Tiffany will get you started on answering some of the questions. She'll make an appointment with you, and together we'll find the best solution for your long-term care. And again, I want to thank you for your time. I'm sorry for the mess up in the beginning, but things happen, as they say.
Wow, thank you.
Thank you so much.
Yes. Guys, if anyone has any questions, go ahead.
I don't have any questions. I just wanted to share something about my grandpa, who he passed away months ago.
Oh, sorry.
He was detected with dementia and Alzheimer, right? But he passed away, right? And I remember that he didn't have anything, right? Any protection or any insurance. And so all the my uncles, aunts, right? Of course, they help right with the funerals and all that. But it's really like start thinking about right why this is very important, long-term care insurance as well. My grandma last year she got a stroke, so she was in the hospital, and in order for the government to provide a provider, right? For some reason, they tell her that they needed something back in order to give help to her, right? Like if I'm gonna give you like a provider, right? I'm gonna put a provider. I need something, right? From you, right? And well, we just ask a family. I mean, sorry, a friends of a family to be a provider for my grandma. So we paid out of the pocket because we were like, oh my God, that's sad, right? That we are asking for help, right? And they want something back because she didn't have enough coverage, right? And it's sad. So it is the story that I always share because I always think about that and I'm like, we need to have something, either whatever it is, we need to have it because we cannot rely on the government or anyone else. So I just wanted to share that. And thank you so much, Richard.
That was great. Can I hire you to start every one of my seminars? Because that's what we need to hear. That is important. Those stories are precious. I'm sorry for your family. I'm probably the reason I stay in this business is to help people like that to think ahead. Hopefully, you're thinking ahead, if you can. But what I wanted to clear out and make sure Tiffany understands and the rest of you that we have almost something for everybody. We actually have a plan. If you're between 19 and 70 years old and you work at least 30 hours a week, that you can get a guaranteed issue plan. There's no questions about your health. You just have to fit the bill. You have to be 19 to 70, and you have to be working 30 hours a week, and you get to pick your choice of coverage. And if it's a little, it's better than nothing. What they always say, something good is better than nothing at all. And that's what we try to hammer into everybody we speak to. When you go buy a car, you walk into an auto mall and it has the Hyundais and the Kias over here, and it has the Bentleys over there. And you don't say to somebody, well, if you don't buy a Bentley, you're wasting your money. No, you find out what they can afford, and you put them in a car that fits their need, that fits their pocketbook, and that's how you sell long-term care insurance. It's all about the premium tolerance. How much can you afford, and whatever you buy, it'll be something good, and you'll appreciate when that check comes in. My mother got up. My mother didn't listen to me too much. So she bought a very small policy. When my father went on claim and actually had to use it, they got a check for $50 a month. I'm sorry, $50 a day, which is $1,500 a month. And that went a long way. It helped. It really did. So there's nothing too little to buy. But thank you for that, Bertha. Appreciate your input.
And
Thank
also,
you.
yes, thank you, Richard. I did have a question in regards to premiums. So, about how can you kind of explain like how premiums are determined? Because there's a myth out there that long-term care insurance is expensive, but
Oh,
all spending 10 to 15,000 for a nursing home is too. So how do you decide?
yeah, you couldn't have said that any better. And when somebody said to me, long-term care insurance is expensive. Well, if you think the insurance is expensive, wait till you get the care because that's really what's expensive. Listen, you buy what you can afford. I have to go back to that. Your premium is going to be determined by your health, your age, and what type of policy you bought. Um, so that's the quick answer to that. If you're going to ask me for averages, I can say about the average for a place to start is going to be somewhere about $200 a month for the insurance. But that doesn't mean we don't sell $100 a month. And we do whatever the person can afford. Like I said, whatever money comes in at the time of claim will be appreciated, and it helps to protect your assets that you have, and it helps you to keep them in place so that you're not spending dollar for dollar. And you might end up in the nursing home sooner if you don't have something to help you, like a cushion before that you actually get into your own money. So that would be an individual. If you're going to ask me, like if you pin me against the wall, yeah, somewhere around $200. But it all depends on what you're buying. It's like anything. It's just like buying that car. How much is a car? When you walk into the automobile, you can't say how much is a car. Well, what do you want in the car? What is your financial health? What's your credit report? What's your budget? There's so many things that go into it. And it's the same thing. That's why I always make my analogies to the car business, because you have your choices. You can drive to work in a Bentley and have all the luxury in the world, but you're still going to get to the same place. You're going to get there, or you can save your money and buy a Hyundai, get there just the same, but put the rest of the money away. There's a big difference, and it's the way long-term care works. And I wish there was a magic answer that would cover 100% of all your care, and it wouldn't cost you anything. But Yeah, well, actually there is, and it's called Medicaid, but it does cost you because you have to give all your money away. So that's not the best, and you don't get to choose who your caregivers. You don't get to choose where you're going for care. And you don't, and so, I've had stories where, I live in this place. I live near Tampa, Florida. Um, and if one of my family members was going to go on Medicaid, all right, the next bed that would be available might be in Miami. Well, there goes that idea of me participating in their life going forward because now I won't get to see them that much. So when you have when you have a long-term care insurance policy, you have choices that you might be able to pick a nursing home closer because you have the insurance. But again, I do understand that some people just don't have the money. Listen, I'm not talking to you from a castle. I'm talking to you from average person that just kind of believes in this product. That's it. More questions?
Great, thank you
Well,
so much. I have one more question.
good, good.
As far as, so we can offer riders on insurance policies, right?
Yes.
So what's the difference between just adding on a rider, like for instance, an Alzheimer's rider, or getting an actual long-term care insurance policy?
Okay, good. That's a good question. I'm going to answer it because I hate when people say that's a good question. I have to stop saying that because every question is a good question. Every comment's a good comment. There's no such thing as that type of rider in long-term care. Long-term care insurance covers everything. If they weren't going to cover you for something, they wouldn't approve your policy. For example, if you already had Alzheimer's, okay? If you already have Alzheimer's, that means you're already on a claim. Not a paid claim, but you would be a claim. They won't sell you the insurance, okay? So there's no way to rider in a particular illness. Now, I said we have lots of solutions, and it's only for people that have the money. But if you happen to have, say, $50,000 or $100,000 saved up, I have a policy that will actually cover you, even if you're in a nursing home. Okay? Because it's based on an annuity. An annuity is just an investment. But we have a company that actually leverages your annuity for care, for long-term care in a nursing home, even if you're in the nursing home. So, I wouldn't be able to answer that question that you just asked before, but I do have an answer for it. If you're in a certain scenario, financially, I have a solution for you. But you don't have to pay, and I think this is your question. You don't pay extra for a disease. If you had a stroke, Alzheimer's, or anything, that's it. The long-term care, if you're approved, covers everything, no matter what. There's no 6-month look back like there is in health insurance. They don't say we're going to cover everything except a stroke or everything except Alzheimer's. That's not the way it works. If you've been approved for a product, you're going to be covered for everything in every venue. Home care, assisted, nursing home, doesn't matter. So I think that would answer your question. Now, there are riders for other things, like the rider to add inflation protection, or the rider to add a waiver of an elimination period, or which is called the deductible period. There are things that you could put into your policy which make it more, I don't know, more valuable, more inclusive, but it's going to cost money because it adds a percentage to it, but not for health reasons. You're either in or you're out.
I like that. I have a question. So
Mhm.
let's say somebody already has a policy, right? And it
Yes.
comes with all those riders. I now understand that it's best to have the long term because you don't know if you're going to even have anything that policy is offering you, right? Like what if you have a symptom that's not included in that rider? With a long term, it'll cover you, right? So would it be a good idea to offer our clients that already have a whole life, to offer them the long term rider as well? I mean, the long
Yeah.
term policy as well?
Anybody who's purchased insurance is a good candidate for long-term care insurance because they understand the value of insurance. So yes, when you, as an agent, Vanessa, I remember speaking to you, when you're working with people in your database that have bought whole life insurance, uh, and hospital insurance, any kind of insurance, okay? Those are great candidates to be talking about because you can ask that question. Have you thought about what would happen to you if you had a long-term care claim? So the answer to that to you could be, I never thought about it, or what's the long-term care claim? So this is a way for you to have what we call the conversation. Write this down if you're going to be an agent. CIAIA. Okay? Have the conversation. That's the C. Do the intake form. That's the I. That means you want to gather the information, the health information. A. Make an appointment. Okay? I. Do the interview. What I just did with you. Okay? That's the interview with the client. And A. It will result in an application. Okay, CIAIA. I use that all the time because those are the steps you need to be successful. But yes, anybody that's purchased any kind of insurance should be a good possibility as a candidate for purchasing long-term care insurance. And
Okay. Sorry, another
no, go.
question. Okay, let's say that they do have the whole life and then they go ahead and add the long-term care. Can they let's say that, I don't know, they get a heart attack and it's part of the riders that are in there. Can they claim for both? Can they claim both
Well,
on both policies?
if you have a whole life insurance, it's for what? What
Long
is life?
term. Okay.
It's for death, right? Okay. So if you have a heart attack or a stroke and you have a whole life insurance policy, it doesn't do you any good because you didn't
Okay.
die. You have to die.
Right.
Okay.
Okay.
But if you don't die, having the long-term care insurance, yeah, that's great because now you're going to live until you recover, or you're going to live, you know, not as well because a stroke could paralyze you. So you want to make sure that you have that long-term care to make sure that something helps you to live better or as best you can with whatever residual effect that you have from it. Now, when your question is, if you have a whole life insurance, can you add long-term care? You can't add it as a rider once you bought the long-term. Once you have the insurance already. You have to buy a separate policy. But
All right.
what we have today now is for a new customer who's looking for life insurance, you can sell them a life insurance policy, whether it be whole life or universal life, and have a rider for long-term care added to it. Now he's got like a package deal. So whether he dies or he has a claim, he has that covered.
Right.
We can even ask a rider for return of premium if you're talking about a more expensive policy. So if you live, you have a long-term care claim covered. If you die, you have your insurance, your death benefit covered. And if you decide that you don't need this anymore and you want to quit the policy, you have your return of premium.
Okay. Okay.
But those are for more, I would say, people that have more money.
Right.
Yeah. But I don't know who you're going to talk to. You have to be prepared to talk to a person that might like that guaranteed policy, or they might want policy where they say, look, what's the point of me paying for this? I'll never get my money back. Well, yes, you will if you buy this type of policy, because if
Right.
you want your money back, we'll give it back to you.
Mm-hmm.
Okay.
Oh,
So,
nice.
yeah, but there's lots of different options. That's the key to your venture into this industry.
Thank
But
you.
if you don't have the conversations, if you don't bring it up, you're not going to make the sales, and that's the
Right.
key. Cannot be afraid to talk to people, and that's those that. And if you have a group of people you're working your database, that's gold. That's that's the goal. Start there. Start with the people that know you, that you sold other insurances to, and ask the question: have you thought about what would happen to you if you had a long-term care claim? The best answer they could offer you is, what's that? And then you get to talk about it. Or, no, I haven't thought about it yet. Okay, well, come visit me. We'll think about it together.
Thank you. Thank you for the great information you shared with us today. Very interesting.
Good. And Tiffany, I am prepared to share with any of the future agents if they get contracted with us with one carrier. Even they pick the most prevalent carrier, which happens to be, you may as well know, Mutual of Omaha. Everybody heard about Mutual of Omaha? Yeah, everybody knows Mutual of Omaha. All right,
Mm.
they're the number one carrier for long-term care. It doesn't necessarily mean they're going to fit the bill for every scenario, but if you get appointed with us, I will send you this entire interview, and I'll go over it with you again personally just to help you use it so that when you go to make your sale, you feel comfortable doing that. So I'm willing to do that too.
I like that. After this presentation, I know that that's definitely something that I want to get because I'm only selling life, but I still need to do for the long term. So I
Okay.
would need the information of where I can register or start studying for the long term.
We can if you'd like, you can call us on Monday. Tiffany, I can give you that information. You can give out my phone number. I don't mind. I'll talk to anybody, and but just always mention Tiffany. Although Vanessa, I'll remember you, and I'll remember everybody on the call. I remember your names, and so if you're interested in moving forward with that career, we'll help you. Make sure you get what you want.
Thank you so much.
There was, that's very interesting. Thank you for bringing that up, Vanessa, because, how you said Mutual of Omaha. So at our agency, we are signed up with Mutual of Omaha, but I wanted to know if you could, state like, what's the difference between selling a life insurance policy through Mutual of Omaha and a long-term care insurance policy? Do you need any certain kind of credit, qualifications or certifications? I have mine. I just want you to speak it for the audience.
Okay, all right, yeah. Tiffany's got it together. She's all ready to go. To sell long-term care, you have to have what they call a partnership CE credit course. It's an 8-hour course. 8 hours CAs, you take it one time, and then every 2 years thereafter, you take a 4-hour refresher. It goes over a lot of what I did today, a lot of the history of long-term care, a lot of the um, what's the word? I'm looking for a word here. Um, the technical definitions of long-term care. Um, it's not that hard. You'll find it interesting, I'm sure. But that's what you need to sell long-term care. You have to have that 8-hour CE. It's called you're in Texas, right? There you are. So it's a Texas partnership CE class. That's what it's called. And I can give you the email or the website so you can do that. It's an online course. And once you have that, as long as you have E&O insurance, we can get you appointed with any carrier, Mutual of Omaha or otherwise. And you're able to sell it. And you can even sell life insurance policies that have long-term care riders built into it. So that'll be right up your alley because you know your life insurance already. Adding the rider will be a snap. That's going to be really easy. And then the only other thing you might have to take in the future is if you sell a policy that has annuity and long-term care. So you have to have some annuity training. It's just another 4 hours, and then you're good to go. You can sell anything that has long-term care added to it. Okay, and these are all when I say this, what I'm referencing is long-term care that's qualified by the IRS for taxability as well. So people can actually write parts of it off on your taxes. Yeah, it sounds like it. I mean, you could double check, go to the Department of Insurance for your state and just double check. And you're looking for, again, Texas, I assume, Texas Partnership
Yes.
Long-Term Care. That's what you're going to look for. If you've done that, you did it one time. Um, you only have to do it every 2 years. If it's been longer than 2 years since you took it, then you just have to do that 4-hour refresher course. Okay. Yeah. So you're good to go. Um, again, my assumption is if you're selling life insurance, that you also have your health license as well. And so most of the time you have to have your life and health because long-term care is a health product. So if you only have your life insurance, you're going to have to take your health insurance portion as well. And that's a little
Well,
bit more.
yes, for health, if you offer health, you need the life and health. But if you offer life, you just need the life. So
right.
in my
That's,
case, I just have the life. So I
you
need
just
to
have,
take it.
okay, so you're gonna have to take the health portion as well. Yeah, that's part
So
of
do
it
I.
too.
Mhm.
Yeah. So, yeah, I'm glad you brought that up. Thank you.
That's it for me. Thank you so much.
Okay,
Mhm.
Vanessa. Okay.
Oh my goodness, Richard, thank you so much, guys. You're speaking to a team of agents right here. And yeah, long-term care it's a big deal because especially with me focusing on retirement planning, long-term care, Medicare, Medicaid compliant annuities, we didn't even dip into that, but all of these things, we need to have all of these things in our portfolio and our arsenal so we can fully service our clients. So, like I said, you're my long-term care man. If there's any questions or anything like that, I'll bring them to Richard. He's excellent, guys. He's excellent.
Thank you. I'm looking forward to working with you. You know, we stuck with each other now for a long time,
Yes,
and we're not going anywhere. So you bring us these great folks that you have on this call. I love everything that they said. I'm very anxious to work with them. So if you need to get that health license, get your health license, get your long-term care, and we'll become fast friends after that. And we'll make some money along the way too. I know that's part of it, right?
that's part of it.
Okay, all right.
Okay,
Yes, sir.
guys.
Thank you.
Yes, on that note, yes, thank you everyone for joining. Thank you, Richard, for your awesome presentation. I'll be talking about this for a month. Thank you all, and thank you for joining. And on that note, that concludes this class. That concludes this session. Thank you. Have a good weekend.
You too. Thank you. Bye-bye, everybody.
Bye-bye. Bye-bye.